Greetings, fellow traders. I'm Dilin, a research strategist at Pepperstone, presenting the latest weekly update on as good as gold. So gold has been on a strong upward trend over the past week, supported by various investment cases. After gold against US dollar breached the $2,000 mark early this week, it seems like the beginning of the next bull run is underway. Except for palladium, the other three precious metals have shown positive returns against the US dollar over the past 5 days. Silver leads the pack, up by 5.9%. Gold follows closely with a 2.6% appreciation. Since the US dollar is the weakest currency across the board at the moment, if we price gold with some tepid performers like euro, the return shrinks to 1.6%. Nevertheless, the gains always remain positive, indicating a solid rally in gold. Analyzing the daily chart of gold against US dollar, the yellow metal has been trading above the 5-day EMA since last Tuesday, signifying a strong upward momentum. The price touched $2,000 last Friday, then decisively breached the psychologically important resistance on Monday, along with surpassing the local high of 2009.5 from a month ago on the same day. Closing higher by nearly $27 yesterday, gold is actively seeing a new high. If the uptrend continues, we may see 2048 as the nearest level of a potential sell-off, a point where a significant influx of bears was observed back in mid-April and also early May. If the level is broken, 2075 and 2078 forms a substantial resistance zone, as it serves as a historical high in August 2020, March 2022, and also April this year. Incidentally, it also aligns with the 38.2% Fibonacci projection level suggested by the October rally. Several factors contribute to gold's remarkable performance, with the first being the weakness of the US dollar. Gold against US dollar essentially functions as a fraction, with gold as the numerator and US dollar as the denominator. With the market pricing in rate cuts in 2024 and reduced hedging needs against equities, the US dollar continues to lose ground without much support in the near future. The decrease in the denominator boosts the price of gold. And secondly, lower U.S. Treasury yields are also partially responsible for the rally in gold. The 10-year yield is currently at 4.33%. Despite the decimal 2-year Treasury auction yesterday, the yield decrease hasn't slowed down, with the 2-year yield at 4.74%, following a 21 basis point drop so far this week. As yields are still a relatively high level compared to March to May, coupled with the potential for strong rate cuts next year, there is room for yields to decrease further. The decrease in the opportunity cost of holding gold is positive news for the precious metal. Additionally, silver provides a more dovish interest rate outlook in 2024 by pricing in 113 basis point cuts, up from 100 basis point a week ago. The real rate is 2.13%, around 50 basis point lower than the October high. The attractiveness of holding gold increases as the returns from buying treasuries as alternatives decrease, benefiting the gold price. If we examine market sentiment, the 1-month risk reversal, which is the difference between 1 month long and 1 month short implied volatility, is a good indicator. The current number is 3.15, indicating that the market believes if gold moves, it will be a more pronounced upside move. Although the options market is getting excited about a more impulsive move, the sentiment is less extreme compared to what was observed during the banking crisis and Hamas attack periods, suggesting that the gold price can potentially go higher. So in summary, gold continues to rise thanks to the sluggish US dollar, lower treasury yields, and a dovish rate outlook for 2024. Looking ahead, the US non-farm payrolls on December 9th and CPI on the 13th may influence rate cuts expectations, especially if they are lower than consensus. We also cannot fully ignore geopolitical issues. The decrease in risk caused by the ceasefire and the extension between Israel and Hamas did not impact the gold price this time, but any further developments, or I would say deteriorations in the conflict, may increase gold volatility. So that's all for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!